Hello, everybody. Welcome back, and thank you for staying with us. It only gets better as the day goes along, I can assure you. No offense to the previous speakers, though. My name is Claus Mansfeldt. I chair the Private Equity Association, and I also head up SwanCap here in Luxembourg, a private equity fund manager. Today, I'm joined by maybe what one could call a legend of European private equity, Jean-Luc Allavena. And actually, before we go into further details, I just wanted, Jean-Luc, I can see you are with us, indeed from Monaco, your home country, or in fact, maybe you would correct me and say home principality. But before you give us just that detail, I also wanted you to tell us a little bit about your legendary name, because I understand it goes back quite a bit in the history books of Monaco, where you come from.
Well, thank you, Klaus. I'm very happy to be with all of you, and I wish you a very happy 10th anniversary indeed. I'm here in my office in Monaco. My family has been here for almost 4 centuries. So I was born and raised in my country. You have the right to say country and principality. And my roots are here. And that's why my investment company, Atlantys, has been created and based in my home country.
Very good. Just to sort of frame things a little bit, there's probably a little bit more sunshine where you are than where we are here in Luxembourg. But thank you for joining us today. So Jean-Luc, I have had the benefit of speaking with him previously, and apart from being generally very impressed by his CV relating to also our sector, private equity, I think he also comes across, as you will find, as what I would call a European businessman, but with an American spirit. And I hope nobody's insulted by that description. And going back to the CV, indeed, an impeccable history. Educated at HEC in Paris, banker with Paribas, and a CEO with Péchinet, as well as Lagardère, a chief of staff in Monaco, and a partner at Apollo. And perhaps the last bit is one of, but not the only, connection into our kind of private equity world that we represent here today. And actually, very interestingly, you know, it hasn't been a siloed career at all, actually. And this brings me a little bit to the journey, Jean-Luc, of your career, leading through to you know, from being a business manager to via being a country manager to now being, let's say, an institutionalized investment manager and even a family office of your own making. Maybe you could just go back to the beginning, though, and share with people a little bit about how your journey started. You know, and I'm assuming now that you didn't really study private equity at university necessarily, or maybe you didn't even plan to enter up and end up as a partner with Apollo.
Thank you, Klaus. As a conclusion on what you said about Monaco, I'm very happy to wear your scarf for the 10th anniversary, which is with some red and white, just as our Monaco flag. So thank you for this courtesy and this honor that you did to me and to us. No, I couldn't study private equity at the university or at school. I'm too old for that. And at the time, probably we wouldn't even have spoken about it. I jumped into private equity and this journey a bit more than 30 years ago. Probably a coincidence. I was at Paribas. It was summertime 1987. And one of our managers came back from the US and said they have invented something there. It's called management buyout, leverage buyout, and I read a memo about it. It really happened that way. I just had started working. And obviously, at the time, as you know, the idea and the purpose was, can you buy assets, can you buy a company without having a capital for it? And how can you use and structure a debt in order to be able to buy assets that we couldn't finance otherwise? By pure coincidence, 3 years later, I was called by a search firm, and they were looking for a CFO for one of the first large buyouts in France on a packaging company at the time called TechPack. It's called today LPEA, still a deal with PAI. And at the time, LBO France, Péchinet, and the management had bought this company from Eurocom. And the founder, an entrepreneur, Alain Chevalier, an amazing guy, was looking for his number 2 and CFO and was hired for this position. I was 28. And I started this long journey. It was more than 8 years. From the CFO, I became the CEO and then the CEO, and then ultimately the chairman of the whole division when it was integrated into Péchinet. And that's how the journey
May I ask you, Jean-Luc, on that? It was a very interesting point, and it's worth repeating that, you know, at the age of 28, you were chosen to be CFO of a large company in France, and you know, what do you think the person who hired you, what do you think he did when he hired you? What did he see? What did he want?
Probably first of all, he was just crazy. And I remember he told me as an entrepreneur, this is what I like. And it's probably one of the conclusions about this whole journey is that you have to bet on people as much as you bet on assets. And we had a very good fit, but I had to convince the 2 shareholders, Péchinet and LBO France, because they were much more rational than an entrepreneur. I was just working very hard. I'd been working during a few years before between Paribas and what is now called QS, which used to be the Lyonnaise des Eaux. And probably I was just ready for this kind of exercise. One of the arguments also was, when you're 28, you don't do any politics in the company. You work 24/7. You're paid much less than anybody else that would be more experienced. And you just fight for one project and one person and a team you're dedicated to. And well, at least these were my arguments when I tried to convince them to hire me at the time.
Great. Okay, and yeah, and then you know, several further sort of scenarios evolved where you were you know, evolving with or taking these businesses forward, considering and with the manager or with the owners of the company. I understand, you know, there were several strategic options considered that took you into further interface with private equity houses. And maybe if you could share with us a little bit that story, how you interfaced with those houses and what you learned there and what you actually then applied to your own situation.
Well, it's very simple. 5 years after the first deal was signed, Péchinet considered selling their stake and asked the management to look for a new shareholder. At the time, which is only 25 years ago, there was a very limited number of funds in France. LBO France was already a shareholder. 2 or 3 others had started. But I had to go to London, to New York, and to Asia to meet with the existing firms, roughly 20 of them. And we selected 3. And the winner was Apollo. Leon Black, Josh Harris, and Mark Rowland had created the firm in 1990. And we liked the way they approached the business, very quick, very smart, build-up oriented. So the value creation that we could get with them seemed to be very high, and we had decided to go ahead with them. When a year later, the Péchinet management changed their mind and said, well, it's an attractive asset. We want to keep you with us, and we're going to build a whole division around your company. So we ultimately didn't do the deal with Apollo, but we did it with Péchinet. We invested our own money for this deal with them, and we we decided to go ahead.
And I understand you almost sort of took a leaf out of the private equity book in structuring the deal. One goes to something we'll discuss, I guess, later, which is, what are the key sort of tools that really work in private equity, and I presume here it's the kind of the real alignment of the management, to the next phase of ownership of the company, and then I think you almost designed a similar management participation, or MBO almost, but with a very large industrial party involved rather than a financial investor at that stage.
Yes, I mean, this is obviously a completely different time, and I don't want to look too old. I'm only 57. But 25 years ago, we had to work a lot to structure these deals because each of them was different from the previous one. Today, obviously, it's easier because it's already packaged in a way, because after 30 years in this, this industry has structured so many deals that more or less you know how you're going to do. At the time, we didn't know at all. So we were inventing step by step the structure, the investment of the management, the partnership, the governance with the strategic partners. And we went through this. The second part is meeting with 20 major funds in 1995 means 25 years later, knowing more or less all the industry, because for most of them, they've been growing. And the others, which have been created, usually have been either a spin-off or just a new fund created by partners which took the experience from one of the large firm and decided to create their own fund afterwards. Yeah. So it was indeed completely different. At the end of the day, the basics were the same. How do you create value with a good asset, with a good team, with a good potential market? How do you structure it the proper way in order to give the company the capacity to grow, but leverage it as much as you can in order to maximize the returns for the investors? And the combination of both has been the basis for the history of our company at the time. And the deal was a good one. Ultimately, it became a whole division of Péchinet, then Alcan Beauty Packaging, and then was ultimately sold by Alcan Rio Tinto to Sun Capital and now to PI, which means it's interesting to see also the history of the company over 30 years, which is part of a large conglomerate, becomes a buyout, goes back to the large corporation, Péchinet, afterwards sold to two successive funds, and maybe at some point will become again a large part of a packaging group.
It's fascinating, this journey, and we would like you to reflect on the next phase even. But before we go in there, it's interesting to, perhaps for many of us who are not so familiar historically with France, haven't lived necessarily in Paris, etc., and followed the business from there, but how actually incredibly active private equity has been in France over the recent decades, and how much deal making actually has been done, and how it has been successfully done. And when we look at some of the data, we find that on the continent of Europe, France is actually the largest market for private equity overall. So that might surprise some people sitting further from it than we do, and certainly you did, or do still. And talking of which, could you take us through the last stages that then, having done private equity-like transactions, that took you in the end towards actually joining Apollo, and what was possible with them and why you joined them?
Yes, it's also, by the way, it's also part of the journey. We didn't do the deal with Apollo in 95, 96. For 10 years later, in the meantime, as you mentioned, I've been the chief operating officer of the whole Lagardère Media Group. 11, 12 billion euro sales in the media sector that you know, with magazines, TV, book publishing, and many other things at the time, 20 years ago. And 5 years later, I was called by Prince Albert II when he became the sovereign prince here to be his first chief of staff and to start his reign. So I had to put everything on hold during 2 years. And at the end of 2006, when I was done with this mission, I was by pure chance in London and got an email from one of the founders of Apollo saying, hey, you know I live in London now. We've decided to open an office in Europe after 15 years of existence. Would you like to join as a partner? We didn't do the deal in 95, 96. We know you've been involved in other deals, other investments, other responsibilities at the head of several companies. Would you be interested in moving to the other side of the table and become an investor, which I did January 1st, 2007, when I joined Apollo in London as a partner and started building with the team the franchise in Europe. And that's been now for 14 years. And 4 years ago, I became independent with my own investment company, Atlantys, doing deals with funds, mostly with Apollo, executing these deals and co-investing my own money and money from other partners in these deals. And that's how, in this journey, as you can see, depending on the people I've met with, sometimes by pure chance, sometimes provoking these opportunities, have been able to be successively around the same table in different positions. But the heart of my activity has always been, how can you as an entrepreneur make companies grow, improve their performance, choose the right assets, and make your stakeholders happy and successful.
Absolutely. And maybe just a quick reflection on the deal making you've also done then with Apollo. I know it's not only in France, of course, but let's dwell a little bit on France, after all, being the largest market for PE in continental Europe. Is there some sort of rule of thumb, you would say? You know, what are some of the key things that one needs to keep in mind that might be different when doing a transaction in France, or isn't it really possible to generalize like that? Is it actually the same components you need to apply when you negotiate a transaction or consider a company anywhere in Europe?
Yes. Well, first of all, I will not give any lesson. You have around this screen a very large number of highly qualified professionals, so they know about this business. Each of us has specific angles, I would say. Mine have been in Europe, not only in France, to identify businesses which were a bit left aside. You know, sometimes you have attractive sectors, you have some scintillating sectors attracting light and people focus on them. I've been exposed to this during my 5 years at the head of the Lagardère Media, for instance. Many people are fascinated by these sectors, but if you look at them as an investor, they may not be as attractive as they are, as glamorous as they are. And as an investor, I've identified a set of companies which had not been really the focus for their shareholders or potential investors. One of them was to go back to passionate, which is also part of the journey. The way year after year you bump into people that you have been working with 10, 15, 20, 30 years before. And at the end of 2007, a year after we started in Europe, we heard that Rio Tinto had acquired Alcan, but had to sell assets in a rush, and especially focus on their core businesses. And they decided to sell Alcan Engineered Products, which was the former Pechiney Aluminium, manufacturing for aerospace industries, the car and automotive industry, transportation. So we looked at that, and the person in charge was very simply the same CEO as the one who was running the whole packaging business when I was the chairman of one of the divisions. And interestingly, this company, which had very high standard of technology, manufacturing, human skills, was not really taken care of. So we made a proposal to buy it, and ultimately it became the company which is listed now under the name of Constellium. We restructured it. We did a carve-out, a very complex carve-out. We gave to this company its autonomy financially, strategically, and also with its own team. It's been a very successful listing in New York on the 23rd of May 2013, which made a company which was about to disappear became a new, rising star in the sector. And you can look at Constellium today and its development. So I think if I take only this example, it means how can we identify assets where, for many reasons, the work has not really been done, or they have not been the core strategy of a group, and therefore limited investments, not the best people in the company, or many criteria in order to choose assets where there is a strong potential.
Very interesting. I mean, it's almost like you're looking at sort of, for want of a better expression, sort of semi-orphaned assets, perhaps sitting in a larger conglomerate and not having top priority, being one aspect. And with that comes with perhaps a little bit of a lack of dynamic governance, which is clearly one of the advantages perhaps of private equity, in terms of just being able to make relatively efficient decision making and to have a very clear sort of playbook. But maybe before we talk about, perhaps towards the end, we talk about your present activities, but if we could actually now take this opportunity and this discussion we're in to share some reflections, perhaps, if you don't mind, about, you said a little bit about how you try to identify the companies that are suitable for an investment, at least the way you looked at it then and possibly still do. Were there some other aspects in terms of the operational improvement or any other factor, could be leverage, that you think, in your experience, proved to be particularly useful, lever to pull in order to generate a value out of this, perhaps slightly overlooked asset that you embraced?
Yes, well, certainly. And again, I took this example, but as you mentioned, France, we could also talk about LPEA in the aerospace sector, listed company, no anchor shareholder, therefore no real governance and strategy, limited capacity to grow. We identified this between 2013-14, bought a piece of debt, a larger one afterwards, and ultimately took control with other funds. And this is exactly the same kind of example. Where is a potential jewel that nobody has really taken care of? That's definitely the first and most important criteria according to me. The second one is being contrarian. Very often we are called by banks, by lawyers, by companies, by intermediaries, saying, hey, look, here's the process that's going to start. You can buy this asset and you have 10, 20, 30 candidates, prices going up, high competition, where on the other hand, you may find sectors where everybody's scared and you can get a much better opportunity. When I speak about Constellium, it was the aluminum sector. And when you look at the sector in 2007, 2008, 2009, it's certainly scary. But the second point for me is really, and the focus is, how can you be contrarian? How can you have a different approach and play a cycle where, if you know the sector well, if you work hard, if you work and dig deep into the analysis of a company, of a sector, how can you make sure that you identify a company at the bottom of a cycle and then take it and get the benefit, obviously, when it goes up? That's certainly the second approach, which is always being contrarian. Third is the quality of the people, obviously. And very often you find good managements in place. They just need to have the guidelines, the strategy, the financing behind them, and feel strong, which means feeling comforted by an investor or a group of investors doing their job and bringing a real value added. Look at the deal that we did with Veralia. We bought it from Saint-Gobain in 2015. 4 years later, the company moved from 17% EBITDA to more than 23. And they did a good job before. The additional focus on a sum of potentials for manufacturing efficiency, potential for growth, and performance improvement in general is also changing the profile of the company. And we've invested in other sectors, in the insurance sector, for instance, where an insurance company where we're investing, Athora, bought Generali in Belgium, for instance. And life insurance is another sector where most of the large insurance have decided to stay away or to sell these long-term liabilities while you have an opportunity to invest. So to summarize, it's more or less always where is there a company which has these a bit left aside? Where is the cycle in the sector? And can we be contrarian, investing at the bottom of the cycle and try to get it to the top? Third, very simple methods, very focused with the right people at the head of the company. And we bring our capacity to help the management in acquisitions, financial engineering, or specificities that a fund knows how to deal with, and the managers focus on their core business.
Thank you, Jean-Luc. You know, to tie it a little bit perhaps to what you're doing at present as well, because we're here now about, you know, you're reeling off a list of very prominent corporate assets that you've worked with, taken through a growth phase, quite large ones. And I know that you believe, maybe that's the American side of you, if I may say, you know, when you believe in something, go big, or not necessarily go home, but certainly press your advantage. And the question now is also, you know, doing that perhaps from the perspective of Apollo, a giant. Now I know you have your own firm, Atlantys, which is perhaps a hybrid between a sort of a co-investment, direct investment, and a family office. Are you basically still able to generate exposure to the type of transactions that have served you well in the past in this new setting?
Oh yes. By the way, it's the purpose for this setting. Atlantys is really made to identify these opportunities, to execute the transactions, and then to co-invest, which means it's in addition to the way you do it when you are a partner with a fund. The plus is, first of all, you take the risk as a co-investor, which means your credibility is even higher. Secondly, you do it across the platform, not only in traditional private equity. I've done deals in the real estate sector. I mentioned the insurance sector. We also do a lot of credit, natural resources. So you bring this know-how in order to identify the good opportunities, to organize the work around the sector and the companies and the assets to make sure that you do the appropriate analysis, the due diligence, in order to make sure that the opportunity you have identified is the right one. And then co-investing and doing the follow-up, which I can do with any kind of investor and fund. And obviously it means leveraging the knowledge that we have at Atlantys in a sort of sectors, countries, and kinds of deals. So it means doing even more, but with a strong focus on the value added that you bring to investors, identifying the opportunities with the highest potential.
Great. So doing more of the same, and that goes back to perhaps a little bit the theme of this conference is looking forward the next 10 years. I think we're going to finish with that. So you're interested in doing more. You are not scared by the pandemic, the inconclusive but increasingly conclusive US presidential election, and the yet to be implemented Brexit, just to pick a random three let's say macro factors that are appearing on the front pages, and that might scare a lot of people from investing, but it doesn't seem to have scared the financial markets in recent times. But are you worried about it? In this backdrop right now, and looking forward the next 10 years, are you making any significant moderations or accelerations or steady as you go kind of decisions about your investments in private equity and related areas in that period?
Well, obviously, this is our global environment, and I don't think any of us would say, I'm not worried. You shouldn't be scared, because being scared means maybe renouncing, and that's not the right approach. Worried, yes, especially also, from a personal point of view, this COVID crisis, which is definitely not over, is something we have to take very seriously for our families, for the people around us, for our teams. So if we put this aside, that it's a major concern, it probably is going to be a concern and worry in 2021 until hopefully we find the solutions. But in the meantime, it means we've been through this crisis since the beginning of the year with new opportunities. The sum of companies have been through a real slowdown. For some of them, there is a liquidity issue, which means it's the right time to come and help them, bring capital, bring financing, bring new solutions or new opportunities. Some of the deals I'm working on are for companies which would like to buy other companies but can't raise money now because it's not the right time for them. What we all have noticed, and you mentioned the markets, obviously with the level of liquidity that we have all around the world, the markets have been supported until when, and that's part of the risk that we have to be collectively conscious of. This is not going to last forever, which means at some point there should be some soft landing. But for now, thank God, this crisis has had limited consequences on a sort of companies because they have been able to get additional financing, bridge financing, any kind of additional capital in order to support them during this tunnel and hopefully seeing some light now at the end of this tunnel. So yes, it's a major concern. The liquidity that has been injected by the central banks is a major help. Probably the companies, the funds, the investors have been better prepared for this crisis with the experience that they have been through only 10 years ago. I had studied at the time private equity when the crisis happened between 2007 and 2008. It's probably a good experience and a good basis to get the lessons from this crisis and make sure we don't do the same mistakes now. If you talk about geopolitics, I've dedicated a lot of time, as you know, to the relationship between Europe and US, the relationship with the UK also. I've spent a lot of time in the UK over the past 15 years. On the Brexit, I would just say, as a person convinced that building Europe is a necessity, I'm just sad. I'm sad. I was born and raised with the idea that we would build a strong and broad Europe, and seeing the UK leaving is just made me sad. Now, obviously, it's a concern on both sides, and probably consequences will not be good in the next 10 years in the UK and also for the European countries, having lost such a vessel. With the US, as you know, it's been a bit up and down, depending on the personality of the president. Let's hope with the new president there will be a link or stronger link between the US and the most important European countries. You mentioned the US and obviously the American sponsors and funds and investors. I must say it's a real pleasure for me, coming from the old Europe, to work with Americans. It's straightforward, it's quick, the decisions are clear. I mean, I like the method that we have when we work on deals and when we take decisions, which means for our industry, I am globally very optimistic. You mentioned the increase and the projected increase in the capital raised for all the funds in the next 5 years, and more than 15% growth every year. There is a reason for this. The liquidity is certainly one of them. The other one is the performance and the quality of the teams and the quality of the general partners and the advisors, and the collectively, I think we bring a very good performance, good returns, knowledge, security, because the structure of our funds and the way we structure our deals are rather safe. And I'm not surprised that a larger number of investors are increasingly willing to allocate capital to our asset class. Lastly, I think we've collectively proved that we know how to navigate during these cycles, how we can protect the investments during a crisis, how we can get the benefit of an opportunity when it goes up, and this rather recent and young industry. Let's say we are a bit more than 40 years old. It's very young compared to many industries we invest in. I think we've proven over the years, over these 4 decades, that we know how to deal with our investments, and it means we can be very optimistic for private equity and related businesses for the next 10 years. So I'm sure we're going to celebrate your 20th anniversary in 2030 with a very good track record.
Thank you, Jean-Luc, Allavena. Thank you very much for staying with us and sharing your insights. And with that, we will make a very definitive American-style decision to finish our session, unfortunately, and move on to the next. We're already running a bit over. We could continue our fire chat all afternoon, I'm sure, and certainly look forward to an opportunity to do something like that in the future. So thanks again, Jean-Luc, and have a nice day, and we'll see you soon again. And
thank you, Claus. It was a real pleasure and a great honor, and I hope to see you soon in Luxembourg.
Thank you. Thank you. Now, we have a couple of housekeeping matters from our moderator. So, Stefan, word is yours.
Sure. First of all, thanks a lot, Claus and Jean-Luc, for this enlightening discussion, for sharing your experience, and also for explaining us step by step how you created that fabulous career and journey. Also, on our side, it is certainly a priority to help build the new generation, and speeches from persons like you, high-level speakers, are very important, and also, for example, to use the LPEA Training Academy in the future.